Welcome everyone, and thank you for joining us for the Financial Wellbeing of Detroit Residents. What do we know? A community conversation hosted by United Way for Southeastern Michigan and University of Michigan Poverty Solutions. While we wait for everyone to join us, just a few housekeeping items. Please feel free to introduce yourself and your organizations in the chat. And then throughout the community conversation, please feel free to ask questions throughout the presentation in the Q&A.
Okay, good afternoon, everyone. My name is Megan Tybus. I'm Director of Economic Mobility at United Way, and I will be your MC for today's event, which is about the financial well-being of Detroit residents, hosted by United Way for Southeastern Michigan and University of Michigan Poverty Solutions. In a second, I'm going to turn it over to our leaders of our two organizations for some welcoming remarks. But first, I'm just going to run through our agenda. What are we planning to accomplish today? We're going to ground our conversation in the context of United Way's Alice report, and then we'll move to a presentation of key findings of a new report on financial well-being in Detroit from our colleagues at University of Michigan. Along the way, we'll hear from several members of our community who've experienced firsthand some of the challenges highlighted in this report. We'll have some time for Q&A. So again, please feel free to use that Q&A function in your Zoom in order to log your questions, and we will make time for those. And then we'd like to hear from you. So we'll have some particular questions for you to respond to in the participant feedback segment of the agenda. But you can also feel free to put your comments and reactions into the chat as we're going through. And I do hope you will stay with us through the end of this time together. We have some very exciting next steps to announce at the end of our program. And so now I would like to introduce our CEO of United Way, Dr. Darian Driver-Hudson. And that is, please take it away.
Thank you so much, Megan, and good afternoon, everyone. It's wonderful to see so many of you here with us to talk about these pressing issues. I think it goes without saying that this has been a challenging year, and it's refreshing to know that so many of you are taking the time not only to listen, but to be ready to take action and partner with all the people who are on this call. I hope you're taking time to look in the chat box. We have a number of organizations who are represented, and each and every one of you play a role in helping us find solutions. With so much that's transpired between the struggle from the pandemic that has now claimed the lives of more than 400,000 Americans, a historically divisive election, which is now complete, and we have transitioned to new leadership, the powerful demonstrations demanding racial equity in the wake of horrific deaths of Black men and women at the hands of police, and a violent insurrection in our nation's capital a few weeks ago. It can be overwhelming when you think about all of that in its entirety. But we know there's still so much work to do, and we can't allow ourselves to be stuck because of all the things that are happening. And at United Way, just like all of you, we're dedicated and committed to making sure that we continue to press for positive change, and making sure that, especially in these times of crisis, we continue to push forward. Our charge as a United Way is to mobilize people and resources to address the immediate needs of everyone in our community. We stand united to help families get out of crisis and stay out of crisis, with the ultimate goal of fostering stable households and making sure that all of our children are thriving. In addition to meeting immediate needs, we advocate for meaningful policy change to remove the systemic barriers that are faced by so many of our neighbors. And we are deeply committed to combating systemic racism and advancing equity and inclusion for all. In order for all of this to actually occur and for us to be the change that we want to see, it's important for us to understand what's happening in our community, not just from a high level, but really getting an opportunity to talk to our families, our neighbors, our community centers, and getting to the root causes of why so many in our community, 44% of our households in the region, when we say region, we're talking about Wayne, Oakland, and Macomb County, continue to struggle to afford their most basic needs. Today, we are very honored to partner with University of Michigan's Poverty Solutions to discuss the findings of a new report on the financial well-being of Detroit residents. This report clarifies and documents the substantial structural barriers to financial well-being that make it especially difficult for Detroiters to make ends meet. These barriers, in many ways, are the product of generations of discrimination and deeply ingrained institutional biases. This has led to disparities in education, income, housing, incarceration, health, business ownership, home ownership, and countless other key aspects of a free and prosperous life. Now, as I said earlier, when you think about all of this in its entirety, it could be overwhelming, but fortunately, we have a number of partners that are forging a pathway forward together. These are a key area of focus for all of us who are on this call today. And I'm encouraged to know that so many of us are just thinking about this because it affects us all. These are our families, these are our communities. And I'm just very grateful for the partnership that we have with the University of Michigan, for diving deeper into the nuances of financial well-being, going beyond our ALICE report to really understand what is happening in our communities in Detroit. We look forward to this continued partnership and with everyone on the call. So please continue to put your names in the chat. We've got 104 participants. We want to know who's here so we know how to get in touch with you as we begin to craft solutions to these enduring problems. This conversation is just the beginning of a much, much more robust and important partnership that's yet to come. United, we can empower our families to do more than just survive, but to thrive. And now I would like to present Dr. Luke Schaefer. He's the director of University of Michigan Poverty Solutions and the Herman and Amelie Cohn Professor of Social Justice and Social Policy at U of M. Thank you for your attention. And Dr. Schaefer, please come right on up.
Thank you, Dr. Hudson. I really enjoyed your remarks, and I'm just really thrilled to be here with everyone. So at Poverty Solutions, we're a university-wide initiative of the University of Michigan that seeks to partner with communities and policymakers to find new ways to prevent and alleviate poverty. So we believe the university has a set of skills, a set of tools that can be brought to bear on some of our toughest problems. But that work has to be done in partnership. And we're really blessed to have incredible partners like the United Way of Southeastern Michigan. In fact, when I think back to the start of Poverty Solutions in the early days, as I was talking to President Schlissel and working with the committee that set our charge, I think exactly this type of partnership with United Way was something that was brought up. So it's exciting for me now that we're 5 years in to see that come to fruition, and I'm really looking forward to watching it grow. So when we think about fighting poverty, we think about really, as Dr. Hudson said, getting down to the specifics, right? And the concrete, tangible things that affect people's lives. We really try to take a systems approach where we say we can intervene at the individual level, and that's important, but we also want to think about how do we change systems to help people live healthy and productive lives. Finally, we're a big believer in trying to think big, right? Look for those transformational changes that are maybe 5 years or 10 years down the line. But we also really want to think about what can we do today? What can we do tomorrow on job training, on access to jobs, on affordable housing, on transportation, all of these issues. What can we do to make systems work better for families? So I'm really excited to be here. I'm going to keep my remarks short, in large part because our team member, who's the lead on this, Afton Branch Wilson, is just a jewel of our team. somebody who I trust with both my research and my life, if I needed to, in either of those cases. It's not true about many people. So I'm just looking forward to trying to get down to specifics, right? And see where can we work together to intervene? How can data research and analysis help inform that and help inform what we learn as we go? And how can we build the little changes to do things that are transformational for families? Thank you.
Thank you, Dr. Hudson and Dr. Schaefer, for your leadership and for your support of this initiative. Before we dive into the next segment of our agenda, I did just want to share I wanted to ground us in a few quotes from you, from the audience. So we asked at registration if folks would share a story about their experience with financial well-being. And here's a selection of what you said. One person said, I was evicted. My car was repoed and I lost my job. I started working with a Wayne Metro couch and became a first-time homeowner in 2018. Another person said, I have grown my financial well-being through setting small goals and giving myself a small reward. Another person said, financial well-being is a form of self-care, as mundane and necessary as brushing your teeth. And another person said, as a female, Black and Indigenous person of color, I faced inequities in gaining access to equal pay at the start of my career 15 years ago, and that has had lasting impacts. So you can see we've got a wide range of experiences in the room. There's cause for hope and there's cause for more work to do. So with that, I would like to turn it over to my colleague, Brian Van Dorn, who is the manager of Health and Basic Needs at United Way for Southeastern Michigan, who's going to share with us some context from United Way's ALICE report.
Thank you so much, Megan, and good afternoon, everyone. I just want to take a few minutes to set the stage, to share with you our North Star, if you will. We have a fundamental understanding that working households in our state, in our region, and right here in the city of Detroit are struggling to meet their most basic needs. The cost of living is vastly outpaced income. And this fact requires us to look at the scale of the problem and dive deeper to understand the factors that contribute to this imbalance. The framework for this understanding is rooted in what's called the ALICE report. So what is ALICE? ALICE stands for Asset Limited, Income Constrained, and Employed. What you'll see here is that ALICE is everywhere. ALICE represents hardworking individuals and families that even with multiple jobs in some cases are struggling to meet their most basic essentials, let alone save for shortfalls, emergencies, or other long-term goals. The ALICE report is at its core provides us with a method to break down household costs compared to household income and to identify the number of households that are struggling to make ends meet. Next slide. ALICE is a biannual data-driven report created by United Ways on a state-by-state basis in order to provide a closer look to what families in our communities are experiencing. It looks at the true cost of living based on actual expenses of the most basic and absolute necessities. It's able to provide an understanding of the cost of living for each county, which allows us to see how different communities are impacted. But why do we need the ALICE report? Again, the ALICE report is a framework, and we need this framework because the way that we measure poverty and hardship against economic stability and prosperity is inadequate. Our country currently uses the federal poverty level to measure poverty. And to determine that federal poverty level, the US Census Bureau is comparing pre-tax cash income against 3 times the cost of the minimum food diet in 1963, updated for inflation. The federal poverty level does not take into consideration the actual cost of meeting basic needs, nor does it consider different costs of living based on region or locale. So as a contrast to this inadequate measure, the ALICE report dives into true costs across household budget categories of housing, childcare, food, transportation, and healthcare, as well as other items like taxes and technology. The ALICE budget calculation establishes the ALICE threshold, or the bare minimum that a family must make in order to meet all of their family's basic needs. Again, this calculation doesn't include any savings or things for emergencies or future goals like college. It's important to note here that this data represents costs in 2017, We actually have a refresh of the ALICE report coming in the next couple of months, and that report will be reflective of 2019 data. So these numbers will change slightly, but it will not be reflective of additional cost increases or other factors that have come as a result of COVID-19. In 2019, actual costs were well above the federal poverty level at $12,060 for a single adult and $24,600 for a family of 4. Household costs for a family increased by 26% statewide from 2010 to 2017, compared to 12% inflation nationally. When we compare the federal poverty line to the ALICE threshold, we see that there's an enormous gap. The federal poverty level is less than half of the actual survival threshold for a family of 4 here in Michigan. But why does this matter? The federal poverty level is an indicator of whether a family has access to benefits. Recognizing that families over the federal poverty line are still struggling, there are some benefit programs that are authorized to provide assistance above the federal poverty level. In fact, a family that makes between 130 and 185% of the federal poverty level still qualifies for reduced price school meals. Unfortunately, this is far below the ALICE threshold. So ALICE gives us a method for explaining this gap, and the data that it provides allows us to discuss the working poor in a way that is easy to understand and has no political connotations. When we look at this data, it's clear that ALICE families are working, but they aren't making enough to get by. So let's take a quick look at the percentage of families living below the ALICE threshold, or BAT, in Macomb, Oakland, and Wayne counties. This percentage includes those households that are below the federal poverty level and up to the ALICE threshold. So in Macomb County, for example, 39% of the nearly 350,000 households are below the ALICE threshold. In Oakland, that number's 32%, and in Wayne County, 56% of the 684,000 households fall below the ALICE threshold. So when we zoom out a little bit, we see that 43%, as Dr. Hudson mentioned, of all Michigan households are struggling to make ends meet. In Detroit, that figure is a staggering 74%. With 74% of Detroit households unable to afford their basic needs, we know that we need to dig deeper into each of these budget categories to better understand both the micro and the macro factors that are impacting household budgets. We're committed to not just reporting these numbers, but to finding solutions that help lift families to greater financial stability. This financial well-being of Detroit residents study takes us deeper into doing just that. It helps us pressure test some of these budget calculations and presents us with opportunities to address key barriers to financial wellness in our community. Thank you for your time, and please feel free to follow up with us if you'd like to learn anything more about ALICE.
Thank you so much, Brian. As Brian has shared, the ALICE report clearly shows that in Detroit, nearly 3/4 of households struggle to make ends meet, and that the federal poverty line is set too low for reality. Thousands of ALICE families, tens of thousands in Detroit and elsewhere in our region, are struggling to make ends meet because their incomes simply aren't enough to meet the cost of modern life. At United Way, our vision is to empower families and communities to thrive, not to survive, as Dr. Hudson said. Fostering financial well-being is core to that vision because financial well-being is interconnected with all areas of life. In our modern world, household finances serve as the means by which we achieve our hopes and dreams. The best things in life may be free, but most things in life require money. The experience of being unable to afford basic expenses is a vicious and self-reinforcing cycle. Families who are constantly juggling bills have few options to deal with life's inevitable bumps in the road. An unexpected expense or reduced hours at work can quickly spiral into a crisis situation, putting the family at risk of eviction, utility shutoff, food insecurity. The stress alone is enough to take a toll on a family's mental and physical well-being, and it makes it much more difficult to fulfill work obligations, to say nothing of the direct impacts of material hardship. Faced with nothing but bad options, families sometimes resort to high-cost debt, and then they're trying to keep up with those mounting bills, but the unsustainable payments can just further constrain their finances. And kids who grow up in families struggling to make ends meet are more likely to miss school and have significantly higher levels of behavioral, emotional, and educational problems. Meanwhile, families who can routinely cover their essential expenses experience a virtuous cycle. Not only do they have consistent food and shelter, but they feel less stress and they're able to make investments in their economic future. Adults are able to devote time and energy to career advancement, and they have the mental bandwidth to support their children in learning and growing, providing a strong foundation for their children's educational attainment and their children's employment outcomes as adults. They're able to build up savings for emergencies, plan for the future, access affordable credit to help them achieve their goals. The fundamental nature of these disparate cycles are true across all communities. This we know objectively from existing research. We know it intuitively from the lived experience all around us. But in Detroit in particular, decades of systemic inequity have made it especially challenging for Detroiters to break free of that vicious cycle and to get onto the virtuous cycle. We know this also intuitively. Anyone who knows Detroit knows this. So why write another report? As Director of Economic Mobility at United Way, I wanted to delve deeper into the nuances. I wanted to comprehensively and objectively synthesize and document the specific underlying factors that make it extra hard for so many Detroiters to achieve financial stability and economic mobility. And I wanted to know the most promising high impact opportunities for what we as a community could do to address these systemic barriers so that we as a community could more effectively channel our resources to help more Detroiters achieve greater financial well-being. So I asked the team at U of M Poverty Solutions if they would write a baseline report on what we know about financial well-being in Detroit, drawing on existing research published in a wide range of sources, as well as recent original research from U of M researchers. And they said yes, and that's absolutely fantastic. And it is such a pleasure to work with the U of M team on this report. And I also want to thank the Ballmer Group for providing funding for the U of M team to complete this report. So this new report for my colleagues at U of M, it tells us a lot more about the ways in which the deck is stacked for Detroiters and how it got to be that way. That's a really necessary first step. We got to know what we're up against, but it's going to take all of us in order to unstack that deck, all of us working together. So now, before we dive into the report findings, I'd like to invite to the stage Maurice Irvin to share his story.
First of all, good afternoon, and thank you for having me here. One of the things I find difficult as an individual is to talk about myself and my story because sometimes I don't think people want to hear it, but right now I'm currently unemployed as a resident of the city of Detroit. And during this time, while it's been difficult to try to push forward, make ends meet, as it's been the theme of this conference so far, I'm extremely grateful, I should say, for the lifeline that's been extended to me through United Way by way of Focus Hope. In 2019, in November, I started experiencing financial difficulty, and I'm not even sure as to how, but I got in touch with United Way by means of Focus Hope, just by calling and reaching out. And from there, I've been introduced to different individuals and programs that have helped me sort of rebound to get to the position that I desire of economic stability and self-sufficiency. And at this juncture in my life, I'm just extremely grateful for all of the services that have been provided to me with housing counseling, as far as becoming a first-time home buyer. I also received services for transportation, for employment and interviews through United Way as by means of using the ride-sharing program known as Lyft. I've been giving consistent and great counsel and advice as to what my next move should be as far as direction of my life. And in every venture that I've had, I'm just extremely grateful for the services that have been provided to me. And I look forward to continue to take part in this venture and see where it leads.
Thank you, Maurice. I know I speak for all of us in saying that we really appreciate you stepping into this space today and sharing your story. We do want to hear your story, and we really appreciate you sharing this story with us. So now I'd like to introduce my colleague, Afton Branch Wilson from the University of Poverty Solutions, to share the findings of her new report.
Great, thank you so much, Megan. So our recent paper here really collects available data on the financial well-being of Detroit residents and really offers a set of ideas for action to ensure that well-being is more widely shared. I want to note here that the paper was written in the months leading up to the pandemic. So in many ways, this is a snapshot of what residents' financial lives looked like before COVID-19's economic disruptions that we know so much about. Next slide, please. First, some basics. What really drives financial well-being? Well, you need money left over at the end of the month, which is what we call positive cash flow. You also need stable income, a savings cushion. You need accessible credit. You need manageable debt. And often you need family and friends to help plug in the gaps when some of those things I just mentioned are not easily accessible. So with these key ingredients, you can control your short-term finances. You can pay your bills on time. You can pay them in full. With a little bit of savings or room on your credit card, you can deal with financial setbacks. And last, financially healthy folks are on track to meet longer-term financial goals and really make choices for long-term security. That could be investing in a friend's business, that could be fixing up your house, or going back to school. But in Detroit, we know that financial health and well-being is just out of reach for many. In spring 2019, the Detroit Metro Area Community Study, the sister initiative of ours at Poverty Solutions, asked Detroiters how they saw themselves financially. A full 56% of residents said, "I am financially insecure or in financial trouble." This is above the poverty rate, which we know is 30%. So throughout the paper, we focus on this population, some of whom are officially in poverty, but many of whom are considered part of this ALICE population, as Brian described. They're working, but they're finding it really challenging to make ends meet. So our key findings are this: due to low and volatile incomes and high costs, many Detroit households are unable to maintain positive cash flow. This is the foundation of financial health. This leads to challenges building savings and maintaining assets, and it also drives unmanageable debts. This cycle of financial stability has really ripple effects across the city. We see this in stress, family well-being. We see this in abandoned housing, entrepreneurship, all sorts of things. But in this paper, as in our work at Poverty Solutions in general, we're really focusing here on systems, not really on individuals and their spending behaviors, what they should and shouldn't buy. We're focusing on the larger systems and how it makes it difficult for folks to make ends meet and find financial stability. So for the remainder of the presentation, I'm going to walk through the main sections of the paper. They're divided into the main ingredients of financial health: cash flow, savings and assets, debt and credit. So first, let's dig into cash flow here, the first ingredient of financial health. So we know that just too few households earn enough income to maintain financial stability. In Detroit, the median household income is $33,000 a year. For context, the median income in Grand Rapids is $51,000 a year. A key driver of this low income is Detroit's low labor force participation rate. A recent report by Poverty Solutions showed that more than 140,000 Detroiters are not working or looking for work. And of course, this is in part because Detroit is segregated from a more prosperous region, right? There's been historic disinvestment in our neighborhoods, which means there's not enough local jobs to support the population, nor is there sufficient regional transportation to get folks to the jobs in the suburbs. So for residents who are working, who work low-wage jobs, they have to deal with income that goes up and down with each paycheck, and that wreaks havoc on their household budgets. This is called income volatility. So many take on side businesses or gig work to plug in the gaps. Think, cutting hair, mowing the lawn, but that income is also not steady. And last, the social safety net that we know exists just doesn't do enough to supplement incomes. The SSI benefit, for example, it's sold as a program to help folks meet basic needs who are aged or blind or disabled, but it provides a maximum benefit of $783 a month. In Detroit, median rent is $650. That doesn't add up. Next slide, please. So despite these low and volatile incomes, Detroiters face disproportionately high costs of living compared to other cities. In the paper, we document several examples of this. Everybody knows that property taxes in Detroit are quite high. And we know from recent research that homeowners were charged based on an overassessment of their home's value. This is a systemic issue. And until recently, auto insurance in Detroit was the highest in the country. This graph here shows utilities in Detroit. You can see here that Detroit, compared to peer cities, the median Detroiter is paying over $1,000 more in utilities than residents in Buffalo, Cleveland, or Indianapolis. And these are unavoidable. Unlike a car or a house, you have to pay utilities. And so these are costs that Detroiters are being asked to fork over. So I'm going to share a quote here. My overhead is just, well, last month when I didn't pay the mortgage, we had exactly $104 left over. And that's because I didn't pay the mortgage. Usually I'll have about $18 left for the whole month. That's for the toilet paper, that's for the gas, that's for anything that the food stamps don't cover. That's a Detroit resident. So she's not alone here. Overall, 1 in 5 households report that they do not have enough money to make ends meet at the end of the month, while about 37% say they have just enough. The consequences of this cash flow crunch are wide. We see evictions, we see foreclosures, we see shutoffs, water and electricity, and we also see material hardship, actual suffering. People can't get the things that they need. Another really underappreciated consequence of the cash flow crunch is the unbanked. 1 in 4 Detroiters do not have a bank account. That's a really basic tool to help boost your financial health. The main reason for being unbanked, it's not because folks don't trust the banks or because of access, it's because it's financial. Folks don't have enough money to put in a bank account, or they can't regularly afford the fees that come with banking. There's also research to show that Blacks and Latinos are actually treated differently by the banking system. So banking costs them more than other groups. So in Detroit, instead of banks, folks use check cashing services, pawn shops, etc. And these services can be really costly also. One of you shared this quote with us to capture how challenging it is to think about longer term issues when you're dealing with putting out fires. You said, financial well-being isn't even on your mind when you live paycheck to paycheck because you're in survival mode. Next slide, please. So what can we do about this? What can we do to help ensure more residents are getting out of this survival mode and are actually thriving? In this paper, we offer a lot of ideas, but I'll highlight a couple of them here. We also encourage you to start thinking about what additional ideas you have. We'll ask to hear some of those later in the session. So first, of course, we have to continue the work being done to get more Detroiters working. In the paper, we suggest a subsidized jobs program, similar to what's going on in Chicago and San Francisco. And these programs really get folks who are most marginalized, have the most barriers to employment working quickly and get income in their pockets. They also offer wraparound supports. One of you offered this quote that really cuts to the chase of what should happen first. You said the only thing that has truly made a difference in my financial well-being and stability is finding a position that pays more money. So really income and employment are key here. Second, to reduce the cost of living here, we need to think creatively. One thing the city could do is to consider income-based water rates, similar to what's in place in Philadelphia. We know from past research that folks want to pay their water bills on time, but they can't afford the rates that are charged. So we need to cut them a break. We also know that thousands of residents are self-employed as micro-entrepreneurs to fill in these budget gaps. But what can we do to make these businesses more profitable? They may never be brick and mortar businesses, but there's something creative we can do to sort of boost their profitability. That requires more research and thinking. Also, we need to target income volatility. This is when your budget goes up and down. In a few states, part-time workers in key industries are actually guaranteed a minimum number of hours a week. This enables them to bank on a steady paycheck at the end of the month. That's something we consider here in Michigan. And finally, we need to make banking work better for low-income customers. Unbanked folks want lower fees and less confusing fees. That's what they tell us in surveys. And banks and credit unions should be creative and work with folks to deliver new products or better market existing ones that fit their needs. And yes, I will be sharing my slides with you guys, so you don't have to write everything down that I'm saying. All right, so moving on to the next section. So next we're going to talk about savings and assets. So with limited cash, many residents are just not able to build up their savings, which are critical to buffer against emergencies. COVID is an emergency experienced at large scale, right? With even a small amount of savings, we know from research that low-income families are less likely to be evicted than families with no savings. Savings, of course, also help with long-term goals that can help a household move up the economic ladder. So school, business investments, things like that. But many residents just can't save. A survey conducted in 2012 found that about 45.9% of households in the metro area never contribute to savings. And again, it's not because residents don't value savings, it's because they can't save due to their cash flow. The vast majority of residents in this survey said their money went to necessities. Last, the savings tools that we have are just they're not really made for low-income families. The interest rate on $100 in the bank provides very little incentive for you to save when you're juggling other bills and expenses. Next slide, please. So moving on to retirement. Based on national trends, we don't have a lot of local data here, but based on national trends, we think the average Detroiter may not be saving enough for retirement. And so as a senior, we'll actually have to rely on Social Security income while working, which is really not enough to meet basic needs. We also know that there's a large racial wealth gap in retirement savings. People of color typically have lower earnings, they have less inherited wealth, and fewer assets to rely on in building retirement savings when compared to whites. This is a major issue. We also know that low-income workers are less likely to have the tools they need to save for retirement. Nationally, just about 1/3 of folks who earn under $25,000 a year actually have employer-sponsored retirement benefits. In Detroit, we know that for residents who do have retirement savings, a significant number of them can't hold on to it. In 2019, 1 in 10 Detroiters tapped into their retirement savings or their pension in the last year to spend on basic needs. So last, I'm going to talk about assets in this section. For most families, we know that a home is their most valuable asset, but in Detroit, home values have taken a hit. We know this. They've been on the rebound for the past couple of years, but property values are still quite low. And the home insurance market and the home repair market, both the things you needed to maintain the value of your home are out of reach for many residents. We also know and highlight in the paper that Detroit has seen, twin foreclosure crises, over 200,000 foreclosures. And there's an abundance of research showing that this mortgage crisis was really rooted in racist lending practices. This is a structural issue. And so overall, the city has seen a mass loss of housing assets, really shifting Detroit from a majority homeowner city to a majority renter city in about a decade. So what can we do about this? To help more Detroiters build savings and maintain their assets, we should be thinking about new tools and products that work for them. One example is more widely available matched savings accounts to help maximize even small amounts of savings. Detroit could also follow a model created by Seattle, which actually has a city-facilitated, privately administered retirement savings plan for workers who don't have access to benefits at work. At the state level, Michigan could do the same thing or partner with other states in the region to create a retirement savings account consortium. These are great ideas out there that we highlight in the paper. We could also ensure that residents who save are aware of new existing financial tech tools. They're out there that can automatically move a small amount of funds from your checking account to your savings and help you budget on the fly. Last, it's important to consider how we can expand the home repair market beyond loans and grants that are, have a long wait list. This would allow homeowners to maintain their income with a fixed limited income, to boost their property values and make their home worth more. So last section of the paper I'll go into is debt and credit. So we've heard about the challenges maintaining positive cash flow and building savings in Detroit. So what does that equal? That means many Detroiters use credit to actually make ends meet and cover unexpected costs, which drives debt. Urban Institute put out a report in 2016 that found 66% of Detroiters had debt in collections, a much higher proportion in pure Rust Belt cities like Cleveland or Indianapolis. So how do folks actually take on credit? How do they borrow? We know that some folks rely on their family and their friends. They overdraft their checking and savings account, or they'll take out loans on their tax returns to access credit. We also know that folks use payday loans, although they're not as widely used as other sources. To manage debt, we know residents keep up by juggling. So one month you might pay DTE in full, the next month you might leave that medical debt bill waiting until the next month. Some debts you might just leave unpaid for months until you get your tax return. So debt itself is a consequence of limited income, but it's also a cause because debt can be costly. Think about how late fees, interest, et cetera, really add up. So this quote really illustrates the debt trap. She says, "It seems like the more and more I pay, it seems like my gas bill just keeps going up higher. Don't matter how much I pay, it just never seems to go down. It seems like when I make a payment, they send me a bill, and it's just like right where it was." So when debt builds up too much, residents have to answer to debt collectors. But Michigan law offers very little protection to consumers from creditors. A Detroit worker earning a full-time minimum wage could see her paycheck garnished to about $280 a week, but then she could see her bank account garnished once the wages hit her bank account. The National Consumer Law Center actually gives Michigan an F for how well it protects consumers against debt collectors. Bankruptcy is really a last resort for folks who want to get out of the burden of debt and debt collection and start fresh. Detroit saw just over 43,000 bankruptcy filings between 2008 and 2015. This is much higher than other cities like Cleveland and Buffalo with similar poverty rates. Detroiters compared to their counterparts in other cities are actually more likely to represent themselves in court, which is associated with worse outcomes, aka less debt erased. So access to affordable credit, is a key element of financial health. For example, with a low interest rate, you can easy to manage the take on. But majority, about 62% of residents who borrow have prime credit, a much higher proportion than in other cities. Detroiters also have lower credit limits when compared to residents in the metro area. So think about what that means for entrepreneurship. A Detroiter trying to start a business has less credit available to invest than others in the region, which makes their business maybe less competitive with folks from the suburbs. So in this paper, we argue that the limited credit of the average Detroiter compared to other places is actually connected to the high volume of foreclosures and bankruptcies. Both of those stay on your credit for several years. So the structural issues here really impact folks' personal financial health. This quote here really highlights kind of the situation that many are in right now. As a millennial, I've gotten by financially by the skin of my teeth for years, working 2 jobs and living in debt. So what can we do to address the issues raised here? Next slide, please. So a few of the ideas that we cite in the paper, I'd like to highlight here. First, we can expand some tested ideas that help people build their credit. One program called rent reporting enables you to report on-time payments to creditors in partnership with your property manager. So you actually help build your credit for something that you do every month. Second, we should think about ways to extend pro bono or low bono legal representation to individuals in debt. Help them secure manageable settlements that they need to move forward financially. In the 43rd District Court, the court invites legal aid attorneys to help with debt buying cases. It'd be great to bring that to our court. Michigan is long overdue for an overhaul of debt collection laws. We might borrow from places like Wisconsin, where you can actually protect some of your bank account from creditors. Michigan folks don't. Lastly, let me get a little closer here. So, lastly, we need to follow the example of San Francisco and other places that have really sat down and thought about government fines and fees. They play an underrated role in driving up debt for low-income people too. Think about court fees, tickets, things like that. How can we make sure that we're not, levying fines and fees in a way that's on the backs of low-income folks in Detroit? So to wrap up here, I've talked about the ingredients of financial health in turn, but it's important to remember that it's a cycle. So low pay and high costs makes it hard to save, which means you might rely on credit to cover something unexpected. But then paying down that debt squeezes your budget even further, which makes it more difficult to save, and so on. Taking on this financial stability really matters to all of us, as I think we know. The ripple effects are felt throughout the neighborhoods in so many ways. But the good news is that there are many places to intervene and promote financial well-being. Of course, we can tackle poverty itself through boosting employment for marginalized workers or investing big in affordable housing. But we can also invest directly in financial health tools, so we can expand things like matched savings or rent reporting. Above all, given what we know and what we've talked about today, we know financial instability is tied to structural racism. And so in discussing solutions, it's important to center racial equity and design programs with Detroit residents and their financial realities at the center. So I'm going to stop here. Thanks for listening. Oop, you're on mute, Megan.
Yep. Thank you so much, Afton. That was really fantastic. And I look forward to diving into the question and answer session with our audience. But before we do that, I would like to invite to the stage Octavia Foster to share her story and her perspective.
Good afternoon, everyone. Thank you for the opportunity to share briefly my voice, as well as a voice of family, friends, and some clients. As I read through the poverty solution at the University of Michigan, August 2020, in those pages, I saw myself and those findings. Although I'm college educated and I am the working class, still struggling to find the keys to success, create generational financial stability, and create open doors of opportunities for myself and that of my clients. I was born and raised on the west side of Detroit, and now as a renter on the west side of Detroit, I see and hear firsthand the challenges faced every day to get ahead. My family, friends, as well as clients all have a story to tell and just want to be heard, to come to some resolution in the 21st century, just to become financially stable. I've noticed one common thread, and that is the lack of knowing available resources to help them out of their current circumstances or long-term situation. For example, I'll briefly give you a background of myself and how I found myself in a financial hardship. How my financial coach at Wayne Metropolitan Community Action Agency helped me see a brighter day, and how I am now helping my clients find a light at the end of the tunnel with the same company. And thinking about times where things were hardest for me financially versus when times were better and financially stable. The month and year of 2005 were supposed to be a year of great beginnings and new opportunities for my husband, minor child, and myself. Starting the master's program at Central Michigan University with a high GPA would have been a dream come true for me. I would have been the first in my family to receive a master's. By the end of the year, I was separated from my husband, living in a one-bedroom apartment with my 4-year-old child, no longer in school, and trying to seek assistance from the Department of Human Services for the first time in my life. Although I had 2 part-time jobs, I still was considered below poverty guidelines. I felt alone, lost, and defeated. I quickly realized my income wasn't enough to sustain my life for myself and my child. School was no longer an option, and online otherwise was not either. Unlike the life when I was married, which entailed a beautiful home we owned, both had careers with great incomes and a savings. We both were college graduates and always worked since we were in our teens. The difference about life in those two situations, considering the fact of having a beautiful home, stable income, and a job, wasn't the issue. We had differences that were unreconcilable, which completely broke down our marriage, which ultimately changed both our lives financially. As I began to search out resources for another family member for water assistance, I came across Wayne Metropolitan Community Action Agency website and was amazed at all the resources and help available to low or moderate income families. In my quest to become a homeowner, I took a 4-hour Saturday class. I was given a coach, which helped me find financial stability. In my first session, we had a conversation about my life and finances. I was told to track my spending, and in my next session, we discussed creating a budget. I started making modifications where I could, and it felt great to report back to my coach my wins. I sometimes struggle with staying on track financially. However, I've come to know this is for a lifetime, not just temporarily. The new goals I've established is to continue to strive for complete financial freedom, become a homeowner, and finish the master's I started years ago. I have many clients at Wayne Metropolitan Community Action Agency that in situations and circumstances that they would otherwise never find themselves in. Many educated like myself, some haven't finished high school, available resources. However, they want the benefit to hear and be heard and have available resources to help them in their situation. As a coach, it's my responsibility to guide them through the resources and information and giving them the tools needed, just as my coach did for me. Empowering them so they can have a sense of pride and ownership in their financial success. Thank you.
Thank you, Octavia, for sharing that story. It takes a lot to open up to a large audience with such a personal story, and we really, really appreciate your willingness to share with us today. So thank you for sharing, and thank you for the work that you do to help others follow in the path that you have blazed. So now we are going to move to the Q&A portion of the agenda. So if you haven't already, put your questions in the Q&A segment, the Q&A function on the bottom of your screen, and we will do our best to answer your questions. So looking here, what we've got so far, we've got a couple of good questions in the chat, as well as a few good ones that were submitted earlier. So I'll start with a question from Kalandra. What are some of the new tech tools that help more low-income people save? Afton, you want to share your thoughts on that?
Yeah, thanks for the question. So one tool I really like is called Isusu, and it's a tool that actually enables you to get together with a group of folks that you know and kind of pool financial resources. A lot of us already borrow from our family and friends. We ask them for 20 bucks here and there. And so Isusu enables you to actually have a rotating pot. So once a month, I'll put in $10. The next person in the group will put in $10 and so on. And each person gets the whole pot. So it's a way to get a loan essentially from people around you without interest or fees. I think that's really interesting just because we know that Detroiters are already borrowing from each other, and this tool is a way to do that virtually, which is important now, but also a way to sort of track it in a way that's transparent and kind of open for everybody to see. So that's one I think that's really cool, and I would love to see that marketed or perhaps shared here with residents.
Thanks. All right, next question. Do you have any thoughts on creating a nationalized public banking option through the Postal Service?
Ooh, that's a great question. Yeah, we know from a lot of research that bank access is really important in terms of location, particularly for small business owners. So we know that being close to a bank makes you more likely to get a business loan. So that, when we're thinking about entrepreneurship, the fact that many banks have closed in Detroit over the past decade, is something that we don't want to be seeing. So I think there's something to that. I don't know that in Detroit, post offices are as widely available as we want them to be themselves. But I do think the more options to bank somewhere, in your neighborhood that you already go to, the better. But I'd be curious if, that type of option would help more access to small businesses, small business loans, excuse me. But I do think it's something worth exploring, particularly as the Postal Service is looking for new ways to stay afloat financially. That might be a way to make sure that public service is propped up. The other thing I'll say about banking is that, some of the research that we've seen shows that we need to do better training of frontline workers. Frontline workers have a lot of discretion in, waiving an overdraft fee or asking someone for an extra piece of ID. And they do that in ways that is racist. So, we want to make sure that there's actual access to physical banks, but we also want to make sure that people who are on the front lines of the banks are treating everybody equally. I think that's something important to think about too, as we're talking about trying to expand banking access through other systems.
Great, thank you, Afton. So we've got another question in the chat that says, are there additional or specific ideas or solutions to consider for families with children? I've been following some of the work nationally around child poverty allowances and interested in understanding how to better explore solutions specifically focused on family and children's financial well-being. If there's any good examples or champions locally to leverage and engage.
Yeah, that's a great question. I think families with children are particularly vulnerable to financial instability. We know from some research that mothers with children are more likely to be evicted than other family types, in part because they have to have larger apartments that are more expensive. So, we know that's something that's a major vulnerability to, to maintaining positive cash flow and things like that. I will say it was great to see that, the new President Biden has brought up this child tax credit. We're really excited about that idea at Poverty Solutions, in part because the idea put forward would make it fully refundable, meaning that folks who before weren't able to access the child tax credit because they didn't get a tax return back would actually be able to access it for the first time. So that's an idea that I'm really excited about. I don't know, Megan, if you have other insights from your work at the Center for Working Families, but that's something I think I'd highlight.
Yeah, I think that it's certainly a really important thing to think about, and I think it's really important to take a two-generation approach, right? That the families with children, what can we do to support the parents, and what can we do to support the children, so that the children have a better shot in life growing up. Brian Rakovitis from CDAM puts into the chat, what about Cory Booker's baby bonds? Great suggestion. I think there's a lot of opportunities for, and also for addressing that kind of intersection between financial stability and early childhood education, right? So childcare is critical to being able to have a job. Quality early childcare is critical for the development of children growing up and their next, their ability to achieve their own hopes and dreams in the next generation. So I think there's a lot there to dig into. Okay, let's see what else we've got in our Q&A chat. So we've got a couple of questions around the water program in Philly. So Nicole asks, the DWSD is currently working with other city departments to create a more affordable rate plan. Can you share more about what has made Philly's plan so successful?
Yeah, I think what's exciting about Philly's plan is that, it's progressive in the sense that, the less you make, the less you pay. And so I think the idea behind it was similar to what research we've seen, is that Detroiters want to pay their water bills, but they just can't afford the rates they're being charged. So I think there are about 3 different rates, and it's based on your distance from the federal poverty line. And it's relatively new, so we don't know if it's the most successful program, but we've heard that bill payment is higher than it was before. I think it's something worth exploring, in part because putting a pause on shutoffs, it seemed a little worrying to me. Putting a pause on shutoffs while your water bill keeps accruing doesn't seem like a particularly sustainable solution to the water bill crisis. I think an income-based rate would be more in line with what folks are used to doing, which is paying their bills. But it would just set it at a price that they can afford. But I know there's some difference of legal opinions as to whether we could do that in Detroit or not. So I think it's definitely worth more study and more inquiry.
Great. So we have another question that says, do you have any thoughts on giving subsidized incomes while people are in training or going to school in order to qualify for higher paying jobs? And I know you mentioned that there's a recent report from U of M on that type of work. So what are your thoughts on that? Yeah,
it's a really important idea, and one that already exists in some places. We know in Detroit there's earn and learn programs. There are other things that folks can access to actually get paid while they're training. So I think it's a phenomenal idea. So the subsidized job report, I can share it out with folks, is one where we highlight the reasons why subsidized jobs would be important. And one of the main reasons is that there are many folks who have multiple barriers to employment, that, like, transportation is one example. If you don't have a car, how are you going to get to a particular job? So the subsidized job program says, all right, we're going to hire you, and then we're going to work with you to address all the other wraparound issues and barriers that normally would keep you from getting this job. These programs are pretty expensive. Not going to lie about that part. But in terms of getting folks who have been so marginalized from the workplace because they have multiple barriers to employment, we think it's really worth the investment. Because once you have something in your pocket, then you can start saving a little bit. You can start paying down your debt. You can start saving up for a car. But you really have to get wages first. So subsidized jobs programs are a way to do that, and do that in a targeted way. And also, the other piece of it that I really like is that they often are bringing people together in a cohort so they can connect with each other, they can support each other. That's another really important element of, getting into the job market, meeting new people. So the programs that we've seen, I think, really do that well. There's one in Chicago, there's one in San Francisco, and a couple of other places. So yeah, big proponent of that idea.
Great. So another question we have is, how can we make small dollar loans more accessible? And a tandem question of, is there any hope of fighting the payday loan industry in Michigan?
Yeah, on fighting payday loans, I see that Ruth Johnson is here from CDAD. I know they've been leading a lot of really great work on that in Michigan. So yes, I think we can fight the payday loan industry in Michigan. And Ruth, feel free to put out a call to action or update on your work there. I think with small dollar loans, we have to recognize first that people need them. What I wouldn't want to see is banning a resource that we know a lot of folks rely on. What we know from survey research is that, folks are going to payday lenders because they're open, they have hours that are convenient, they're easy to understand what's going on, what you're going to get, and they're available. So I think in trying to develop new small dollar loan products, we have to actually line them up with what people like from the competitors. I mentioned Isuzu. I think that's a really interesting kind of small dollar loan. It's a social loan in some ways, but I think it's one. I think it's a no cost loan. I think that's something that's really important too. But I also think it's just going to have to be a conversation about financial product innovation. There's just not enough products that are safe, that are affordable for families. So I think there needs to be a lot more working with banks and smaller financial tech companies to work together to develop something new to compete with what's already out there.
Yeah, and I would just add that there are models from other states. There are sort of socially minded lending companies that particularly specialize in offering loans that are designed to meet that need of emergency cash, but in a much more sustainable, much more affordable way. And so, I think the ones that I'm aware of are not available in Michigan. So better understanding sort of precisely why those companies are not operating in Michigan, and then seeing what needs to be changed in terms of legislation or market environment in order to enable those types of companies to thrive in Michigan, I think is really important. Sean Jock from the 36th District Court asks, can you tell us more about the program in the 43rd District Court that helps consumers concerning debts and garnishments? I don't know, Afton, if you're fully prepared to answer that question, but I thought I'd throw it out there in case you are.
I can give you what I know. And so what I know is that at the court invites legal aid attorneys to provide advice and kind of limited representation to defendants in these debt buyer cases. And it's cited as a national model, but I actually don't have data on how successful it's been. So I think it might be one of those matters where it would be good to connect with the court to actually understand in depth how it works and if it works for folks.
All right. Let's see what else we have in here. Afton, do you have any opinions on universal basic income and how that would affect Detroit?
Yes, yeah. I'm certainly a fan of universal basic income and guaranteed income, in part because last year in working on another paper, we did some focus groups with residents, and this came up several times. It's something that some residents are really interested in, which I think is always a good place to start from when you're thinking about a big and potentially controversial idea like UBI. I think Detroit would be an excellent place for it because of, the issues related to cash flow that I mentioned in the paper. But also we're in kind of a tipping point for this idea. There's a coalition of mayors across the country called Mayors for Guaranteed Income, folks from large cities. So we have Atlanta, we have Oakland, we have other mayors who are really coming out for this idea and working together to find ways to fund it, both federally and at the state level. So I would love for the city of Detroit to join this coalition and put some of their advocacy power behind it, because I think it could really solve so many issues that we're seeing as it relates to financial instability. And I think an important part of it is that it gives folks choice. You can decide with your income what to spend it on. So unlike SNAP, where you have to spend it on certain things, you could spend it on medicine. You could spend it on, fixing a fence. So I think that element of choice is really important and something that isn't often offered to low-income families. So that's another reason why I'm a big supporter of it. But it costs a lot of money, and there are a lot of people who would need it here. So that's a barrier that may not be in place in other cities.
Yeah. So another question is, do you see a role for community-owned housing or land trusts and worker-owned co-ops as a way to increase homeownership and income?
Yeah, absolutely. Yeah, I mean, there's a growing movement of folks in Detroit who are interested in this work. It's happening. I think, like many other things, we need more funding and more technical assistance to make it possible for grassroots organizations who want to get it done. But given what we know about the income levels of so many Detroiters, it may not be possible for everyone to be a homeowner at current market costs. And particularly when you think about the maintenance costs, when you think about property taxes. So I think community land trusts are a way to make, homeownership more affordable, and also make it more affordable in a long-term way. We know we have some neighborhoods in Detroit that are experiencing gentrification, and so shared equity homeownership models are a way to make sure that there's a nonprofit or some sort of entity that owns the land and can make sure that the prices don't go up too much. So I think that's something that is really useful when you're trying to think about equity in homeownership and home buying. So yeah, I'm excited about the efforts that are happening right now, and I'm excited to see where they go.
All right, last question, and then we'll wrap it up. So the question is, considering the continued systemic racism within the banking industry around buying homes, buying property, applying for business loans, what solutions and action steps could we put in place to help Black and Brown and low-income persons of color to build and maintain strong and positive banking relationships?
Mm-hmm. That's a great question. I think there's an information gap in a lot of ways. There are many programs out there that residents don't know about. And I think there's an information gap in terms of what you can ask from banks. So I would love to see more kind of citizen education around, if you get an overdraft fee, what can you do? You can pick up the phone and talk to your bank. Did you know that? Here's what you might say. Here's a script. So I would love to see ways to encourage customers and consumers to make banking work for them. We're the customers, of course, but it's very intimidating to go into a place when you might have had a couple overdraft fees. You might be a little ashamed of that. So I think citizen education is really important. And as I said earlier, I think more scrutiny on the interactions between the frontline banking workers and customers to make sure that people are not being treated differently. And once we've observed that, what can we do as advocates, of financial health? What can we do to hold banks accountable for the way that frontline workers are treating customers? Because before I read Dr. Friedline's report, that's what the report that highlights this in Southeast Michigan, I had no idea that this type of discrimination was happening. I knew that, folks were getting subprime loans. I knew that part, but I didn't know that there was this interpersonal racism that's affecting how people can access banking. So I think it's important for us we understand the problem, but how can we advocate against it? And then I think also promoting, credit unions, Black-owned banks, other alternative, banking options in the community. I think those can be more welcoming spaces for residents particularly those who are, suspicious of mainstream banks for good reason. So I think promoting the options that are there, we have a number of them in Detroit, just making sure residents know that there are access points to get to them, particularly, online access points, because folks may not have transportation to get to a bank, but did they know they could open an account online? So I think there's a lot of things that we could do, but some of it's long-term work and some of it's, shorter term.
All right. Well, thank you, Afton, so much for your hard work on this report. I know it was a year and a half in the making, a real labor of love. And so we really appreciate all the work you've done to synthesize all this great research for your presentation today and for answering the Q&A. There were a couple of questions in the Q&A that I kind of put a pin in, and those are the ones around what's the low-hanging fruit? What are the actions that we should take immediately? And I did that a little deliberately because I really believe that's a collective conversation. That's not a conversation, that's not just Afton's opinion or my opinion. That's really an all of us conversation around what can we do as a collective? What are the lowest hanging fruits? What are the opportunities for impact? And I'm going to come back to that in a little bit. But for now, I would like to invite my colleague, Kalea, to lead the feedback portion of our agenda.
Thank you, Megan. And thank you so much, everyone, for joining us. We really hope that you've enjoyed the community conversation so far. So next up, we're going to hear from you, participants. There are going to be 3 consecutive slides. And then we're going to spend about 2 minutes each on each questions. So feel free to add your responses to the chat, and I'll just go through them from there, okay? All right, so first slide, what are some of your aha moments from today? We've heard a lot of information from our great presenters. So what are some of your thoughts? The next, what stands out to you as interesting, surprising, and especially important from the report findings? You can give it about 2 minutes, and then I'll start reading the responses as they come on in. All right, we got some things coming through. So Eric Dewicki, please forgive me if I mispronounced your last name. I'm surprised to hear that bank employees have leeway to waive fees. Absolutely. That discretion there can mean the difference between someone having a little bit of extra money in their budget every month and not. Yeah, for sure. Looking at the report from a comprehensive perspective, Megan will be talking a little bit more about how we can work together later to continue this work. Yep. Seeing the Alice versus the federal statistics on what is needed financially is shocking. Absolutely. How do families support their basic household needs and then also create a cushion is a juggling act every single month. Alyssa Miller says, a reminder of the unbanked population in the city. Absolutely. That's some of the core tenets, right, of being able to manage your money is having a bank account, or, some of us take advantage of having multiple bank accounts, one for vacation, one for paying bills, one for savings. It's critical. Okay. One last one. Calandra Jones says, none of this is surprising. The most important thing for me is starting to think about what would it take a community-owned nonprofit bank and Detroit to consider one of 4 that don't have a bank account and thus rely on predatory or more insecure options. And one more, how drastically, from Stacy Matlin, how drastic the FPL differs from ALICE reports and how we use FPL in all of our other social support programs. Absolutely, absolutely. Really great insights. So the next question that we have that we would like your responses are, and you can type this in the chat as well. What initiatives are already happening in the community that you know about that are working to address the issues highlighted in the report? This is always a great opportunity for information share, right? We all don't get together as much as we like when you're not in a pandemic, but now that we're in a pandemic, we can share virtually. So I want to extract some of those good ideas and knowledge from all of you and share. Okay, let's see, Alexandra Borget says, I've seen many mutual aid societies pop up lately. There's a couple links that are popping up in the chat if you guys like to look, some to the FDIC from Vic Bell. Thank you so much. Ruth Johnson says, there are few employees who offer pay advances concerned about fintech options. Hi, Eric. Yeah. Oh, we have a whole phone number and email to Eric Loudon, who's awesome. If you don't know him, please do get to know him. He's a community affairs specialist for the FDIC in the Chicago region. Yeah, United Community Housing Coalition works with residents facing foreclosure, does great work, dedicated staff and director, absolutely. You can't get more boots on the ground than UCHC. They're a great organization helping to combat a huge problem that we talked about today, right, is keeping Detroiters in their home. Afton talked about the last 10 years, there's been a huge transition from families being homeowners, which is often your largest asset, to renting. So they're doing work to combat that. Okay, Calandra Jones says, there is a citywide conversation beginning by Detroit Future City and others about what economic equity looks like for Detroiters. This is very important to consider, considering the data in this report. Yeah, absolutely. Keep that on the line. Okay, great. Moving on to the next question. What promising ideas for action do you have? I know we talked a little bit more, there were more Q&A questions that were coming up and questions for Afton about how we can collectively think about this as a whole. But if you have any ideas that popped in your head as you were listening, please feel free to drop them in the chat and we'll get read them out. Got 2 minutes. Yeah, okay, we've got some rolling in now. So Carol Barnhart says, working toward universal preschool, absolutely. Childcare is a huge cost, huge for families, and affects a lot of their ability to even earn income and quality childcare. Ruth Johnson says, sustainably fund and expand right to council initiatives for low-income tenants. Calandra Jones says, coordinating local stakeholders to envision for what not-for-profit accessible Detroit-specific, preferably Black-owned bank or credit union would look like. Oh, hi, Vic. Vic knows that I have a construction company, so he's chatting me in there as well. Yeah. Oh man, Eric, that's so great. All of us should unite to push for income-based water rates. It's an election year in Detroit. Okay. Note to that. I'm non-biased there, but I really, our team, Megan and I, focus really hard for the clients that are in some of the programs that we work with, some of our organizations in CWF, to get individual families with their electricity turned on or water. And Chelsea Nebelet at the city has been really helpful in making that happen. And of course, okay, yeah. Sorry. Last one, Packs Against Payday Loans campaign and more accessible small dollar loans. Kiva has a great business model that's global. Banks could model products from that template. Kathy Smith says more information available through agencies working with families like food pantries. Yeah, absolutely. These are awesome, you guys. Thank you so much for sharing your insights and thoughts. And, we can only look to begin to build upon this going into the rest of 2020 and beyond, 2021 and beyond.
Thank you so much, Kalia, and thank you all for your participation. Thank you for being here today. Thank you for asking good questions. Thank you for sharing your perspectives and for adding your ideas. And thank you to the whole team who's been working behind the scenes to put this event together today. I said earlier that it was going to take everyone working together to unstack the deck and make it possible for more Detroiters to achieve financial stability, financial well-being, and economic mobility. So in the final minutes that we have together, I want to share more about what that looks like, how you can participate. Now is not the time to log off early. We have a lot of exciting news to share in the next couple of minutes. So today's event and the release of this report are just the first steps in a journey that United Way and University of Michigan Poverty Solutions are taking together to catalyze meaningful action to more effectively support financial well-being and economic mobility in Detroit and address the systemic barriers and that were outlined in this report and in our speakers' lived experience. In other words, we want to create real systemic change that will lead to an equitable and inclusive economy. And we can't do that alone. We're going to need your help. We want you to come on this journey of change with us. So looking at the participant list, there's a lot of folks I know. There's some that I don't. To those that I haven't met yet, I look forward to getting to know you at some point in time. And before I dive into this journey of what this is going to look like, I want to take a moment to share a little bit more about why I do this work. I want to be clear that my story is not the most important one you've heard today. And I really want to thank, again, Marisa and Octavia for sharing their personal stories and Afton for her incredible research. That said, I thought it would be worthwhile to share a little bit about how I come to this work in the spirit of building a strong collaboration. I spent the last decade and then some working to advance financial empowerment and economic mobility. I do this work because I firmly believe that financial empowerment is an essential mechanism by which to achieve greater equity, racial equity in particular, and equity across other lines of socioeconomic disadvantage. But why? Why do I do this? Both of my parents were the first in their families to go to college. At an early age, I was poignantly aware that while economic mobility is certainly possible, my family was living proof. The building blocks of opportunity are not evenly or fairly distributed. Thanks to my parents' education and the choices they made, I inherited a world of opportunity that my cousins had not. If my parents hadn't had the limited family support that they did, if they hadn't made it through college, or if I had been born to different parents, I might have lived a very different life. As a teenager, I wrestled with these facts, that the privileges I took for granted were arbitrary and unearned due to the happenstance of my birth. I still wrestle with these facts. And increasingly more as I'm increasingly growing more aware of the dimensions of my own privilege, particularly as a white woman in Detroit. The more I learned about the social and economic forces that perpetuate privilege for some and disadvantage for others, the more I wanted to spend my time doing something about it. In 2009, as the economy was falling apart at the seams, I was working to help save the homes of Black and brown people who had been disproportionately sold toxic set up to fail mortgages. And it became very clear to me that financial empowerment was absolutely central to doing something about it, to advancing equity. And by financial empowerment, I don't just mean individuals' financial skills, individual financial decision-making and financial behavior. I also mean the financial products and opportunities that people have access to, the financial systems and socioeconomic contexts in which they operate, everything we've talked about today. Over the past decade, my understanding of the social and economic dynamics at play has deepened, but the fundamental insights that draw me to this work hold true. And I'm committed to working alongside community residents and stakeholders in partnership to make meaningful systemic change that will give all Detroiters a better financial foundation on which to build lives and pursue their happiness. While your particulars may be different, you also have a story. You came to this virtual event for a reason. Some of you have experienced firsthand the feeling of financial insecurity and the vicious cycle of not being able to make ends meet. Others of you have been fortunate enough not to have that personal experience, but you spent your careers working to help those who have. Or perhaps the collective experience of COVID has triggered your appreciation for there, but for the grace of God go I. Whatever your precise reasons for being here today, I feel confident in saying that we all hope for a more equitable Detroit, in which all residents can benefit from a virtuous cycle of financial security and empowerment, leading to a greater financial well-being, mental well-being, and physical well-being. We all want all Detroiters to be able to consistently make ends meet, to be able to afford the things they value in life, and to build a solid foundation for the future. There is no time like the present. This deck did not get stacked overnight. The structural factors that perpetuate financial disadvantage in Detroit have been compounding for decades. COVID has deeply exacerbated all of these issues, but COVID has also shown us that we are capable of focusing our collective consciousness to grapple more thoughtfully and expeditiously with what was always right there in front of us. And it has opened our collective eyes to a broader array of possible solutions. Policy proposals once thought radical or infeasible are being given serious thought and attention, and they're being really considered for implementation or even being implemented. That window of opportunity is not going to last forever. To quote John Lewis, if not us, then who? If not now, then when? Now is the time to think big, to think together, and to turn those thoughts into action. So, how are we going to do that? First, I strongly encourage everyone to read the full report if you haven't already, and get ready to roll up your sleeves. And then we're going to continue the conversation. So, this is just the beginning of a months and indeed years-long initiative and a partnership between United Way for Southeastern Michigan and University of Michigan Poverty Solutions. Next week, you're going to receive a follow-up email that will invite you to do two things. First, we'd like you to share any additional feedback that you might have on today's conversation and the report. You put a ton of great things in the chat. We really appreciate your live thoughts, but things might occur to you. You might read the report, have more aha moments, have more ideas for action. So we'd love for you to respond to our post-event survey with that additional feedback. And then we'd like you to consider registering to join the next session. This is going to be a working session, a hands-on working session on March 5th. It's focused on refining and expanding the list of ideas for action and mapping the landscape of existing and past initiatives to address the challenges to financial well-being that were highlighted today. So Afton did an incredible job on her research, but she's just one person. We know there are so many more ideas around best practice models from other parts of the country, around initiatives that may already be happening in Detroit. And we need your help to catalog those, to flesh those out, to come up with a really comprehensive list for ideas for action. So everyone is welcome. We are seeking to engage a broad range of stakeholders in this working session. I do want to be clear that it's going to be a hands-on working session. We are expecting registered participants to complete some pre-work and to actively participate during that session. And we would love for you to join us. This is just the beginning of our journey. Over the next few months, United Way for Southeastern Michigan and University of Michigan Poverty Solutions will be co-hosting a series of working sessions to refine the ideas from action in collaboration with our community stakeholders. We've got a couple of different working sessions planned out over the course of the next couple of months. And you'll see in this little timeline here that the culmination of this work is an innovation challenge in summer 2021. What is that, you might be wondering? Well, I have the great honor and privilege of announcing that United Way for Southeastern Michigan, in partnership with U of M Poverty Solutions, expects to launch a Detroit Financial Wellbeing Innovation Challenge in summer 2021. The framing and priorities for this challenge will be shaped by the upcoming working sessions. So if you want to help shape those priorities, you should plan to participate in those working sessions. Generally, you can expect that we will be inviting proposals for innovative initiatives to address the issues outlined in this report. This will be a multi-stage, multi-year initiative, which will offer initial funding for early stage feasibility testing, progressing to more funding for implementation. We have set a goal of raising at least $3 million to support this multi-year initiative with a stretch goal of up to $10 million. And I am delighted to announce that we have already raised $500,000 towards this goal, thanks to seed investments from General Motors and United Way for Southeastern Michigan. So thank you, GM. Thank you to my United Way leadership for investing in the transformative potential of this initiative. This work won't be easy. It will take committed funders. If you are a funder out there who wants to participate, I would love to talk to you. It will take public and organizational leaders willing to lean in deeper to structural and systems change. But most importantly, it will take meaningful participation from a broad range of stakeholders. I believe that this new research from U of M, with this new research from U of M to guide the way, and with the experience and expertise of this group of stakeholders, we can indeed collectively create the change we want to see in this world, the changes we need for Detroiters to be able to make ends meet consistently, to afford the things they value in life, to be resilient in the face of challenges, and to achieve not just their financial goals, but all their hopes and dreams. Thank you, and please join us for the journey. And that's all we have. Thanks so much.